You sure?
Yeah, it's time to call bullshit.
Bullshit on what?
Every fucking thing.
Welcome back, ladies and gentlemen, and they say history doesn't always repeat, but it does rhyme, and it seems like everything that led up to the '08 financial crisis is happening yet again. We have bank executives warning about unprecedented risks in the financial system. According to JPMorgan Chase CEO Jamie Dimon, banks are bracing for the worst-case scenarios as higher interest rates elevate the risk of failures and losses in the months ahead. We got a lot to cover. Let's get it.
Party, that party. Come and have a good time with G.O.D.
With nearly $3.9 trillion in assets, JPMorgan is the largest bank in the country and a bellwether for the U.S. economy. So when things start to look a little cloudy, that could trigger shockwaves through Wall Street. In fact, a few days ago, Dimon noted during an interview that bank executives across the U.S. are climbing the wall of worry, referring to poor risk assessment of Wall Street investors right now. Dimon said that JPMorgan is now preparing for a broad range of outcomes and warned about impending risks that could wreak havoc on the economy and financial markets in the final months of 2023. Could we see a massive collapse this winter? Well, the executive kicked off the third quarter earnings season alerting investors about a threatening outlook, stating that now may be the most dangerous time the world has seen in decades, he wrote in the company's latest report. The conflicts in Ukraine and in the Middle East may have far-reaching impacts on energy, food markets, global trade, and geopolitical relationships, he stressed. Despite reporting strong earnings for the quarter, the New York-based bank also reported a 6% drop in investment banking revenue for the past 3 months, with fees falling by 3% because of lower equity and debt underwriting activity. Deposits have also declined by 4% from a year earlier during the third quarter, indicating that more Americans are living paycheck to paycheck and saving less money in recent months. Wall Street, Dimon added, is often focused on current conditions instead of preparing for what could come next. We do hundreds of stress tests a week, Dimon revealed. Usually geopolitics presents itself as a deep recession or a mild recession, and markets doing well is not a reason ever to say they will continue to do well, the executive explained. Dimon also cautioned that tight labor markets and high government debt levels are likely to keep inflation elevated for much longer than expected, and that interest rates could rise even further. Wells Fargo has observed stress signs among customers, with delinquencies exacerbating banks' exposure to failures. Losses on bad loans are climbing so fast that Wells Fargo charged off $850 million during the quarter, more than double the amount it wrote off in the same period last year. Another financial institution reporting worrying numbers is Bank of America. After facing unrealized losses of $106 billion in securities in the second quarter, the bank revealed that losses climbed to $131.6 billion in quarter three. In total, U.S. banks could be grappling with at least $650 billion in unrealized losses in their securities portfolios, according to analyst estimates, after prospects of interest rates staying higher for longer led to a bond market rout in the third quarter. Okay, but we can really say things aren't looking good out there, right? But what is so crazy is that there's all these talks about fixing the problem. We need new regulations. But the fact of the matter is the laws have been on the books. No one enforces them. Everyone lets these bankers run rampant. Thank God we have Bitcoin, but hey, the Bitcoin legend Max Keiser has been calling out this bullshit forever. Now, one thing I admire about individuals, regardless of what they believe or think or what have you, anyone who is willing to stand up and right to the face of a monetary demon, tell them they're a monetary demon, and call them out for their wrongs, and expose them with no fear, I admire people like that. And there is a lot of good stuff right here. Let's roll some of these compilations of Max Keiser throughout the years, calling a spade, and standing up to the Jamie Dimons and financial terrorists. Let's go.
The problem, David, is that you have no regulator on the scene. The FSA here in London let Bernie Madoff and AIG get through without a look at them. The SEC in the United States, just like Goldman Sachs, sell crap securities, as they call them. They call them crap and shit. They sell them to their own customers and made money selling these crap to their own customers. Yeah. Then the Serious Fraud Office right here in the UK, remember a couple of years ago, BAE and the Prince of Bandar had a multi-$100 million slush fund, and the Serious Fraud Office couldn't prosecute because Tony Blair said, no, go ahead. It's okay. Well, now, that's unconscionable. That's why I say let's some bankers.
Yeah.
But you have to exercise the cancer. You've got cancerous bankers in the system corrupting the system. You've got to get rid of this cancer.
Okay, so what?
It doesn't matter what the reform is, because you've got no regulatory agency who's willing to put anyone in jail. During the last major scandal, the S&L crisis in the United States, you had 1,800 bankers went to jail.
Look,
this time you've got none, except maybe Bernie Madoff.
Okay,
so you've got nothing.
So enough.
No, there's got to be serious prosecution. They're committing serious crimes.
Goodness
They're
sake.
stealing money.
You're just talking la la la, just so that people get all excited
Do
about
people
it.
like austerity measures? Do you
No.
like austerity measures?
No, look, that's pathetic.
Is that what you want?
No,
The
listen,
question,
but that is
the
a
question
cheap
is, by the way,
shot.
this isn't this.
Controls the regulator. The regulator is controlled by the government. There is no doubt that the
The
regulator
government is owned by the banks.
Oh, rubbish.
Absolutely.
Listen, we're now moving into conspiracy theory nonsense,
No,
which
that's
is
absolutely not.
why we need to understand exactly what went
Who
wrong.
owns Royal Bank of Scotland?
Yes, of course the government own it
But you
now.
said- you
but
said
You just contradicted yourself.
no, all of
And
us.
why,
if we
why
do.
don't we have enough money? Why are we suffering austerity measures? Why do we have rapid
Because we
high
spent too
inflation?
much money.
Because the banks stole a majority
They
of
didn't
that money.
steal
When they
anything.
come and they
That's where
say
you-
that they're
that's
going to
where you lose the
No,
argument.
when they say that they want to do ring fencing or increase reserve capital, tier 1 capital, they don't obey tier 1 capital rules as it is. They don't obey the laws as they do.
Now,
These
what
banks
do you
have
mean?
met-
What do you mean by that? So, talking about
They
tier
need
one
to have a
capital.
certain amount of capital on their books. They is
Right.
their primary capital they make loans against. Okay, they have to have a certain amount. They are in violation of those rules right now. They have been for years. That's part of the reason this crisis has developed. They don't enforce those rules. So if they say, oh, let's go from 7 to 10%, it doesn't make any difference because they're not enforcing the rules today anyway.
What would
they started using debt as a casino method mentality.
let's not even go down the
That's
casino banking.
absolutely
That
true.
is rubbish.
I mean, even in the report, they say they're going to separate the
Listen, when
predatory
people
banks
start
from the
saying
utility
casino
banks.
banking,
Richard, what
They
would
mentioned that in their report. There's been fully documented in reports all over the world that there's a casino aspect to these banks. My friend,
the bankers.
you've got Stockholm syndrome. You've been held hostage by bankers, and now you've fallen in love with them. You're ill. You're in league with the financial terrorists. You're a bad guy.
No, listen,
Okay?
no,
You're
I
an
don't
enemy
mind
of
that.
everybody
No.
in this audience
Let me
because you're
speak. Let
defending
me
some
speak.
bankers who are
You just
stealing
know.
money.
These guys are financial terrorists. They should be dictated. Throughout history, when bankers have seized control of the system and impoverished the community, there's been some penalties to pay. And this is one of those inflection points in history where a group of individuals have taken upon themselves to bankrupt the state, and they deserve to be punished with the harshest possible terms, and I do not rule out stock options. Let's be honest about what the stock options in this case are. Let's talk about what it is in this case. It's counterfeiting. In much of the cases of backdating stock options and issuing stock options and awarding of Reg D insider stock, this is counterfeiting to go along with fraud and embezzlement. You cannot position this as merely poor business practices or a one-off calamity in the financial market. This is a pre-planned financial holocaust by financial terrorists, and I think if bin Laden were running the central banks in America, he would be doing a much better job and less damage.
Cameron warns against banker bashing. So UK Prime Minister David Cameron yesterday said he understood the public anger towards the nation's banks, but warned against banker bashing.
Here, it's blatantly obvious that your own bankers are financially r***ing your people right up there. Cameron, you did nothing because you're in their pocket, because you're a schmuck. Why are you going after these people?
Man, Keiser nails it, but all the macro headwinds do not stop in what we've covered. Things are going to get worse. You need to prepare, and you need to make sure that you're stacking and protect yourself from this economic calamity. Further into this report, institutions have become more susceptible to facing bank runs and systemic failures that could undermine their financial quote-unquote soundness. No wonder why so many credit rating agencies are now downgrading banks that look highly leveraged. The industry's woes have gone from bad to worse. We can remember Silicon Valley Bank, and that was just the beginning. Moody's Investor Service cut the credit ratings of 10 small and mid-sized American banks. The actions have sparked widespread concerns over American lenders' costs, profitability, and specific exposures, and have also raised crucial questions about the banking sector's potential vulnerability to another crisis. Hey, and not to mention, delinquency also shot up in the past quarter, with Cox Automotive reporting that borrowers more than 2 months late on auto loan payments went up by 26.7%. 7%. Credit card companies are reporting soaring delinquency rates, as well at 8.3%, and that's up from 5.1% just a year ago. Data from New York Fed shows they are racking up losses at the fastest pace in 30 years, according to Goldman Sachs. And hey, with no cash coming in from the government anymore, Amy Coffin was executive director of the American Bankruptcy Institute, and she highlighted that some people are finally experiencing that economic crunch. They're having to pay their mortgage, their car payments. There are several people who haven't been able to weather that storm. Simultaneously, corporate bankruptcies are soaring too. So far, more than 400 corporations have gone under. And to put that in perspective, corporate bankruptcy is rising at the fastest pace since 2010 and are double the levels seen this time last year. Companies in the consumer discretionary and industrial sectors have seen the most bankruptcies. As demand continues to cool down, historically, these sectors carry significant debt on their balance sheets, putting them at much higher risk in this rising rate environment. And the public is definitely feeling it. A majority of 77% foresee an increase in the cost of food, while 75% predict higher gas prices, 69% expect higher utility costs, and 64% believe healthcare costs will get even more expensive. Millions of Americans have already exhausted their savings and are facing rising debt loads while their incomes stagnate. Consumer prices aren't showing any signs of relief, with more businesses reporting price hikes ahead of the holiday shopping season, and turmoil in the oil and energy market are likely to lead to gas price increases and expensive heating bills this winter. Man, guys, we've been telling you it appeared that the debt spiral is here. The perfect storm for Bitcoin to completely go ballistic has also arrived. Bitcoin is here to eradicate the banks anyway. We don't need them anymore, and we don't need to be reliant on their horrible policies. They are the worst people in the world at their occupation, and now they're irrelevant, and now you can protect yourself. These people can't steal your wealth anymore, but you have to take self-custody and use best practices. And if you need help with that, we got just the guys for you. To reap the reward of Bitcoin and all it has to offer, you have to take self-custody. That is the revolution, and Simply Bitcoin Originals are powered by the Bitcoin Way. And the Bitcoin Way, as your dedicated Bitcoin IT team, they're here to guide you from start to finish on your journey to properly self-custody your Bitcoin. They've recently introduced a 100% privacy-focused collaborative custody service. With that, you can benefit from advanced multi-sig security, inheritance planning, and much more while remaining 100% in control. Looking to get started? Book a free 30-minute call using that link below. Now, guys, it's easy to kind of get excited with everything going on because, you know, we've been pointing this out for a while, and I showed that clip in the beginning of The Big Short, and you've got to be feeling deja vu too after we went through all this. But remember, we're Bitcoiners. Stay humble, stack sats. We know where everything's headed. Stay the course, and remember what Ben Rickards said.
You know what I hate about fucking banking? It reduces people to numbers. Here's a number. Every 1% unemployment goes up, 40,000 people die. Did you know that?
No.
Did you know that?
No, I didn't know that.
Just don't fucking dance.
If you prefer to go down with the ship, fuck you.